Hello, Forex traders. This is Eric from fxpnf.com. One of the things that really first attracted me to point and figure charts was their ability to cut through the noise that is oftentimes associated with trading the Forex. Unfortunately, I think after this last weekend, the noise level has increased thanks to the G7. I've been following the story pretty closely on the blog on my website. If you want to check it out, come on by. I've made several posts over the weekend detailing what's been happening with the G7. For this video, I want to just touch on real quickly the new language that the G7 injected. Here's the sentence. Since our last meeting, there have been at times sharp fluctuations in major currencies, and we are concerned about their possible implications for economic and financial stability. That was the G7, the new language that everyone's talking about today, and speculating that it might very well lead to intervention from the G7. Now, I cringe at the whole idea of intervention in the Forex market. Why? Because it's only going to complicate matters. It's only going to add more volatility and more noise to the market. Now, that might be a good thing for short-term day traders. Increased levels of volatility make it a little bit easier to catch bigger moves on an intraday basis because the uncertainty and levels of volatility are heightened. Currency pairs tend to move a little bit more. So it might be a good thing for short-term traders, but for longer-term or swing traders, this new idea of intervention is a little worrisome. So now more than ever, I think it's incredibly important to focus on the fundamentals, focus on diversifying, managing your risk, maybe even reducing position sizes as we segue into what may be a new period of intervention in the Forex market. Is the intervention going to work? I doubt it. The bottom line, the Forex market is too big to manipulate. No one, not even the G7, can manipulate the Forex market for extended periods of time. So here we're looking at the Euro-US dollar. This is just a daily chart using candlestick charts. It's a pretty bullish looking chart, isn't it? The Euro-US dollar did open a little bit lower on Sunday's opening. In fact, it gapped lower because of the G7 communique, but the euro has since rebounded. And it's looking like it's poised to break out to new all-time highs versus the US dollar. Here we're looking at the point and figure version of that same chart. The Euro-US dollar hasn't been on a sell signal. Put another way, the dollar hasn't been on a buy signal versus the euro on its 100 pip box size chart since April of 2006. Can you believe that? Now what's even more interesting is that the Euro-US dollar right here we're seeing broke out of a bullish triangle. This is the most bullish continuation pattern in the Forex point and figure world. So is the G7 going to be able to influence the Euro-US dollar? I don't know. It remains to be seen. One thing is for sure though, that the idea of intervention will only add volatility and increase the risk in the Forex market. So make sure you're cutting through the noise and sticking to a disciplined approach to trading the Forex market, one that point and figure charts most definitely offer.